According to the National Association of Realtors, the U.S. housing market could absolutely go bonkers if mortgage rates hit 6%. According to the latest report, approximately 5.5 million households would be unlocked and able to afford the median price home if rates hit 6%. And NAR estimates that of the 5.5 million, at least 10% would be actively looking to purchase a home in the next 12 to 18 months. When you look at data like this, I ask myself a couple of questions. One, does this logically make sense? And if you go back and look at the last couple of years, we have clearly seen that activity picks up at 5.99. Let's call that 6%. Now, does it make sense that potentially 5.5 million households could be unlocked? Maybe, but call me suspicious. And then could 10% of those be active? And if so, what does that mean? Well, if we look at the active inventory today, there are approximately 900,000 single family homes available, and days on market is up, price discounts are up. So what happens if we add 400,000 more buyers? Things could get interesting. Folks, let me first and foremost apologize. I did not record a daily financial news yesterday. I was back in our Vegas home. Unfortunately, I was sick as a dog. And then on top of that, I caught food poisoning on our first class seats on the way home. So I was in no mood to get out of bed yesterday morning. So yesterday was the first time in almost 8 years that I've missed the daily financial news for being ill or sick. I've recorded when I was sick before. I've missed a couple of days because of tech issues, but yesterday was the first day I missed just because I literally couldn't get out of bed yesterday morning. So for those of you that were expecting the daily financial news yesterday and I disappointed you, I apologize. It is not my goal or something I shoot for. I try to show up each and every day, but yesterday was just not going to happen. Last week on Thursday, we did get an update on pending home sales that we need to talk about. Pending home sales were down 0.4% in July, month on month, but they were up year on year, interestingly enough, up 0.7. Redfin did highlight that 15% of transactions are canceled and that Texas and Florida had the highest cancellation rates. It does look like only 16% of real estate agents expect buyer traffic to improve over the next 3 months. It's going to be very interesting because, as you may or may not remember, I called September, which is the month that is today. Today's September 1st. Hope you're enjoying Labor Day. We're going to see an increase year on year. So again, we'll see what happens in the next 6 to 8 weeks because the September data won't be published until mid-October. We did get a revised Q2 GDP print, and it was better than expected. Initially reported at 3%, now showing 3.3. It was revised higher because of consumer spending. Consumer spending was revised significantly higher. Again, the consumer is not out. We did get some earnings reports that were interesting. Dick's Sporting Goods beat top line and bottom line, raised guidance. Again, they are expected to close their deal with Foot Locker, which was $2.4 billion in early September. Best Buy beat top line and bottom line, although the slower housing turnover and higher tariffs is causing purchasers to be selective when they are shopping. So again, Best Buy being very conservative. Then there's Dollar General at the other side of the income stream there. Dollar General beat top line and bottom line and actually raised guidance. They are seeing, quote unquote, wealthier consumers shopping at Dollar General. Redfin, with the mortgage rate at the lowest with pending home sales, rose 2%. Again, it's going to be very interesting to see if mortgage rates hit 6%. I do believe they hit 6.5% on Friday. Again, if you look at the spread, we are still about 50 basis points above normal. So it will be interesting what happens next week. We'll talk about that in a minute. If we do get that bad jobs number that I've been calling for, Will there be a 50 basis point cut or not? We'll talk about that likely on Friday. Let's keep going with the notes here. We did get PCE, or the third and final inflation reading. Came in as expected, 2.6 in the headline, 2.9 core. There was some fear that core would go up to 3%. It did not. We got some Fed speak here, but actually we'll do that first. Fed President Waller, the Fed doesn't think it needs to cut larger than 25 at the next meeting. Although, again, what I would tell you is let's wait for Friday. If we get a dirty jobs number with nasty revisions, I fully expect a 50 to start being priced into the market, but we shall see. The week ahead. So again, today's Labor Day. Hope you're enjoying Labor Day. Tomorrow we get manufacturing PMI and ISM manufacturing. Wednesday, we get our first of 3 jobs numbers. We get our JOLTS report. We will get a beige book, which is, again, a summary of the 18 districts, what's going on across the country, who's growing, who's shrinking. We will have 2 Fed speeches. Thursday, we'll get ADP. Again, ADP report last time was 104. It's actually expected to weaken to 75. Folks, we are very quickly getting to 0. And then, of course, we will get weekly unemployment claims plus 2 additional Fed speeches. And then finally, Friday, jobs, Bureau of Economic Labor and Statistics expected to be 75,000. Actually, same as ADP, coincidentally enough. Last was only 73. The question for me is, will 73 be revised down? More importantly, will 73 be revised negative? Remember, last time, the 2 previous months were reduced by over 100,000. I suspect if what would be the July number goes from 73, or the June number, goes from 73 to, I don't know, negative 10, you're going to start to hear for a 50 basis point cut very, very quickly. And the unemployment rate is expected to rise to 4.3. I did see this report for folks that are in NVIDIA. I do not own any NVIDIA stock. Probably wish I did. But I did think it was interesting that the top 2 customers of NVIDIA make up 39% of their Q2 revenue. That's wild. 2 customers, 39% of your Q2 revenue. That is pretty crazy. I do want to let you know that I extended the offer for you one more day. If you are coming or plan to come to our Vegas event, you can buy tickets today, which is September 1st. This was supposed to be over yesterday, but again, I was sick, so I didn't share it with you. You've got one more day to buy your tickets, either general admission or VIP, and I will be doing 2 things for you. I will be giving you a $150 credit to all of my teachable courses. You can get your money right, buy box. You could use it as a credit towards the big course, How to Get Started, One Rental at a Time. Whatever you want. So you'll get $150 in credit for teachable. And we will be doing a call sometime this week, likely in the evening, so more of you could attend, just for people who bought tickets. So today's the last day for that bonus of 150 credits to teachable, and a conversation with me later in the mid-September. So last day to do this. It was supposed to be over yesterday, but again, I was sick. So you got 24 hours. Last thing I saw last week was consumer sentiment. We'll talk about consumer sentiment first. It's actually the lowest in the last 3 months. It came in at 58.2. So the consumers are starting to pull back and get a little nervous. And then Affirm beat top line, bottom line, revenue up 33% and raised guidance. I don't know about you, but buy now, pay later doing well. I'm not sure that's a great sign. I mean, really? That's what we're doing now? So I didn't see that as a good thing. Let's talk about why you need to join school. Again, our school community, $20 a month, 67 pennies a day. Here is just a highlight of what the last 5 posts when I took these notes. Shout out Aaron, who just got property number 3. He shared the story behind that. Then there was KC and Kenny heading down to Texas to look at some properties. Denise got her 5th rental. We talked about new tenants that don't meet income criteria. And then Thomas might be buying 3 Lennar homes 4.99%, 25% down, Labor Day special. So getting a free fridge and laundry and all this stuff. So lots of people taking action, lots of people doing deals. You need to be inside school. If you are an everyday wealth builder, it's best to be around other everyday wealth builders. So join school. Also let you know that on Sunday at 8 a.m., you'll get the chance to meet or talk with Jared, who does Rent by the Room. He is a speaker at our Vegas event. So I just put that in Zoom. So that is scheduled for next Sunday at 8 a.m. So folks, I do want to thank you for being here. Again, I apologize for yesterday. If you were counting on the daily financial news, yesterday was obviously my intention. But when I got out of bed and nearly fainted, I knew I needed to stay in bed. I slept like 13 hours yesterday morning. I didn't even get out of bed till like 1:30. So I apologize for yesterday. Hopefully won't happen again for another decade. But hey, I'll be here. Again, join school, buy your tickets to our Vegas event. And I look forward to giving all of you some free goodies. Take care. Have a great day. Bye.